Welcome to Monday morning's Market Outlook. Matthew Buckley, the Chief Investment Strategist here at WCI, and going to be an interesting week, folks. Last week, worst weekly performance in more than a year in the overall stock markets. Rising interest rates, one of the biggest culprits in last week's implosion. Obviously, as we covered all throughout last week in our Monday Market Outlook, Friday Market Wrap-Up, and our sit reps over at Top Gun Options, all eyes are on the Fed. That's the market that we're in right now, and this week we're going to get the minutes from the last Fed meeting, the August Fed meeting, and we're also going to get a Thursday meeting up in Jackson Hole. There's always a meeting annually. The Kansas City Fed hosts this kind of retreat in Jackson Hole. It's usually drives a lot of big news. But this year, Bernanke's not going. Mark Carney, the head of the Bank of England, isn't going, and Mario Draghi, the president of the ECB, isn't going. So a lot of folks aren't going to be there. But, you can't get a room full of central bankers without making some sort of news. Might not be formal, might be in the, on the lake or in the hallways, but there is going to be some news with obviously what's going to happen in September at the next Fed meeting. We're going to start this taper. Are we not? How much is it going to be? Is the Fed just going to cut back on treasuries only, or are they going to cut back on their treasury and mortgage-backed security purchases? I mean, right now the Fed's absorbing about 65% of mortgage-backed securities origination, folks. It was about 45% leading into May. Then rates went up and refinancings plunged. I mean, the mortgage rates have just gone through the roof of late. The rate for the 30-year mortgage this past week, 4.4%, about a full point above where it was in early May. So going to be a very interesting week, folks. It's a little light on economic news, which we'll talk about in a second, but we're going to see a little bit of worry in the market. The Egyptian stock market's just absolutely imploding with what's going on over there. And, our clown car of a foreign policy out of this administration towards Egypt, it would be comical if it wasn't so tragic. So Egypt on the verge of literally a civil war if it doesn't break out in a civil war. So really... I'll leave it at that. I'll leave the politics out. I just have to shake my head looking at this. But folks, kind of a somewhat quiet week as far as macroeconomic news, but we are going to get some earnings news of note as we kind of wind down. Now, unless you were in a cave last week, you know that Walmart and Cisco both swing and a miss. Walmart not only a miss, but providing guidance to the downside as far as the coming months and the coming year. That's never a good sign. Our nation's largest private employer took it on the chin and also saying that the future's not looking good. That matches up with Friday's University of Michigan Consumer Sentiment Report that absolutely imploded. I think it was the biggest miss since the University of Michigan started keeping those records. But not too much, as I said, macroeconomic data. But as far as earnings, I'm going to be keeping it on Tuesday. Home Depot, Best Buy, Dick's Sporting Goods, Barnes & Noble, JCPenney, and Saks. Wednesday, HP, Target, Lowe's, Staples, American Eagle, Toll Brothers. And also Wednesday, we're going to get some mortgage applications and existing home sales. And then we're going to get the FOMC meeting minutes from the last Fed meeting. And of course, the market will be parsing every word, comma, capital, period, to see if they can glean anything about what's going to happen in September. Thursday, we talked about the Fed conference in Jackson Hole is going to begin. We're going to see earnings out of Dollar Tree, Sears, Gap, Abercrombie & Fitch, and Aeropostale. Those are going to be the big ones that I'm going to be following. And obviously, weekly unemployment claims. Friday, Ann Taylor and Foot Locker. And then we're also going to get new home sales as well. So that could be potentially market moving. So here we go, folks. I have some really happy at the performance of a lot of our model portfolios at Wealth Creation Investing and also over at Top Gun Options. This SDS bullish double vertical spread up 203% in the past couple weeks. I put this on as a hedge out to September in case the market started doing what it's doing. As I predicted, this trade goes up in value, up about 204% since we put it on. Really liking what's going on in the model portfolios. Make sure you check your email for that wealth creation with options offer that we had. We did a couple live trading events last week, put out some great trades where I covered some of the quote insurance policies, so to speak, that an investor could potentially put in their portfolio to get ready for the shocks that I think the market's going to see as we lead into the Fed meeting. Even if the Fed doesn't do anything in September, folks, that just means if they don't do anything in September, it's definitely going to happen the next time they meet. So it's not a matter of if, but when the Fed is going to taper, by how much, and whether it's going to be mortgage-backed securities and treasuries or just one or the other. So get ready, folks. Strap in. I'm ready to go. Love this type of stuff as an options trader. I love volatility. The more uncertainty, the better the market is for me. So hang on, folks. We're looking at a little bit of a 3 to 5% correction, but if things get uglier in the Middle East and the Fed gets uglier, I think we're primed for a pullback. We're already hypoxic up at these altitudes in this market, and I think we're really running around a dry forest here, and any little spark could send us with a big move to the downside. And a lot of our positions, like I said, we have some good bilge pumps built in our aircraft carriers here, so to speak, in case we put a torpedo on. But a lot of the other positions that I have in a lot of our portfolios are longer term, bullish, shorter term, neutral to bearish, like this synthetic stock position on the FXI. It's up nearly 400% in a couple months here. Very bullish on China long term, short term, neutral to bearish. Okay, folks, got to run. Got a lot of trading to do. Have a great week. I'll be back with Friday's market wrap up. Make sure you check out the sit rep over at Top Gun Options Tuesday through Thursday. We'll see you. Have a great week.